Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Our group will present about financial ratio. I will introduce my presenter, Nurul Hidayah binti Muhammad Zain, Nurul Nabila Huda binti Muklis, Nur Diana binti Roslan, Sharifah SAKILAH binti Syekh Abdul Kadir, and lastly Fasiha Akmal. We proceed our presentation with Kita Al-Fatihah.
Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alamin. Ar-Rahmanir-Rahim. Maliki Yawmiddin. Iyyaka na'budu wa iyyaka nasta'in. Ihdinas siratal mustaqim. Siratal ladzina an'amta 'alaihim ghairil maghdubi 'alaihim waladdallin.
Okay, let we reciting our doa. Doa ketika hendak mulakan pelajaran. Doa belajar dalam pelajaran, ketika lupa nota dan berjaya dalam cita-cita. Doa penerang hati dan doa agar dicukupkan keperluan sebelum masuk dewan.
Assalamualaikum warahmatullahi wabarakatuh. I'm Nurul Hidayah binti Muhammad Zain. We explain to you what is ratio analysis. Ratio analysis is the process of determining and interpreting numerical relationship based on financial statement. It is the techniques of interpretation of financial statement with the help of accounting ratio derived from the balance sheet and profit and loss account.
I will proceed to sources of data for financial ratios. There are balance sheet, income statement, some statements of cash flow, or sometimes in the statements of return earning or profit and loss appropriation account.
Assalamualaikum. I will proceed about limitation of financial ratio. In order to analyze a firm's financial position and its performance, a reader must also be aware of its limitation. The limitation of financial ratios are: the first, based on theoretical data; second, change in real value of monetary units; third, no standard interpretation; fourth, the difference in accounting methods make comparison difficult; fifth, effect of inflation tend to be ignored; sixth, firm may have different accounting year-end; and lastly, industry average may not be the desired target.
Okay, now we continue from previous. This slide it show purpose or important or advantages of financial ratios. And first, we find out analysis of financial position. Second, simplification of accounting figures. Third, assessment of operational efficiency. Fourth, determining trends in the long run. And fifth, identification of strength and weakness. Lastly, we find out comparison of performance. Okay, our team carried the annual report from Bursa Malaysia. Okay, we have choose the real company. This is a Nestle Malaysia Berhad. We using the ratio to analyze the company. Financial ratio have divided by 5 group. Then first, I want to explain the first ratio. It is the liquidity ratio. Okay, liquidity ratio measures the ability of a company to repay its short-term debt and meet unexpected cash needed. Okay, I want to explain the current ratio of Nestle Malaysia Berhad. Okay, current ratio that we have provide CR equal by current asset divided by current liabilities. Okay, the amount will find out at statement of financial position. Okay, for calculate 2012, 840,703 divided by total liabilities 929,392 equal 0.90. Okay, for calculate 2013, okay, from total current asset 929,987 divided by total current liabilities 107,862. Okay, the equal is 0.87. Okay, that have been concluded. Year 2012 has higher current ratio. This is because higher liquidity and able to meet short-term obligation. Okay, second for liquidity ratio is a quick ratio. Quick ratio, the formula is current asset minus inventory minus prepayment if given and divided by current liabilities. Okay, to calculate 2012, okay, we find out the 840,703 from statement of financial position at total current assets, okay, minus inventory that have been given at statement 411170, then divided by current liabilities 929,392. This equals 0.46. Okay, for calculate the 2013, okay, total current asset 929,987 minus inventory 408,614 divided by total current liabilities 107,182 equal 0.49. Okay, we conclude year 2013 has higher quick ratio because able to meet short-term obligation without relying on inventories.
Efficiency ratio, the ratio that are typically used to analyze how well a company uses its assets and liability internally. Under the efficiency ratio, we will cover the two ratios. The first ratio is inventory turnover. The formula is cost of goods sold divided by the inventory. The meaning of inventory turnover is to measure the numbers of times a company's stock are sold and replaced during the year, or turning its inventory into a sale. The second ratio is average collection period. The formula is account receivable divided by the credit sales times 360. The meaning of average collection period, how long the company collects their debt from the debtors. To calculate the inventory turnover for the group of 2012 and 2013. This is a statement of comprehensive income. This is a statement of financial position for the Nestle. To calculate the inventory turnover, the formula is cost of goods sold divided by the inventory. For 2012, the amount of cost of goods sold we can get from the statement of comprehensive income. The amount is 3003, 2, 3, and 9, then divided by the inventory, the amount we can get from the statement of financial position. The amount is 411170. The answer we can get 7.30 times. For 2030, the amount of cost of goods sold we can get from the statement of comprehensive income. The amount is 3089, 90, and 8 divided by the inventory 408. 614, the answer we can get 7.56 times. To calculate the average collection period for the group of 2012 and 2013. This is a statement of comprehensive income, statement of financial position for the Nestle. To calculate the average collection period, the formula is account receivable divided by the credit sales times 316. The amount of account receivable for 2012 we can get from the statement of financial position. The amount is 394,144 divided by the credit sales, the amount we can get from the statement of comprehensive income. The amount is 4,556,423 times 316. We can get the answer is 31.14 or 31 days. For 2013, the amount of account receivable we can get from the statement of comprehensive income. The amount is 502,207 divided by the credit sales, the amount we can get from the statement of comprehensive income. The amount is 4,787,925 times 316. We can get the answer 57.76 or 38 days.
Assalamualaikum warahmatullahi wabarakatuh. My name is DIYANA binti Roslan and I will presenting about leverage ratio. What is leverage ratio? Leverage ratio are used to measure long-term risk and are of interest to long-term creditors and stockholder. So for make it clear, I will explain how to calculate the leverage ratio for Nestle company. So for leverage ratio, there are two types of ratio, which is the first one is debt ratio. So the formula for debt ratio is total liabilities is divided by total asset. So this is the statements of financial position of Nestle company. This is how to calculate the debt ratio for Nestle. So from this financial position, we will take a look for group column. So back to the formula, total liability is divided by total asset. Just take this is the statements of financial position of Nestle. So we will only calculate for a group for the year 2012 and 2013. So back to the formula, total liability is divided by total asset. So let's calculate for the year 2012. So the total liabilities of 2012 is 1,153,963 and divide by total assets 1,905,169 and times to 100, then equal to 60.57%. So for 2013, the total liabilities of 2013 is 1272290 and the total assets of 2013 is 2088734 and times 200, then equal to 60.91%. So the second ratio under the leverage ratio is time interest earned. The formula for time interest earned is EBIT divided by interest. So from the formula of the time interest earned, we will get the EBIT and interest from the statement of profit and loss and other comprehensive income. So for the 2012, the EBIT is 656,875 divided by 19,202, then will equal to 34.21 times. So for the year 2013, the EBIT is 734,642 is divided by the interest 15,990 and then will equal to 45.94 times.
Bismillahirrahmanirrahim. I will proceed about profitability ratio. What it means by profitability ratio. Profitability ratios measure a company's operating efficiency, including its ability to generate income and therefore cash flow. Cash flow affects the company's ability to obtain debt and equity financing. Okay, now let's take a look at the statement of P&L and other comprehensive income by Nestle. We just focus only for the gross profit margin and net profit margin. The formula for the gross profit margin is gross profit margin divided by net sale and times with 100. We take the gross profit here and the revenue as the net sales and time with 100, and we get the 34.1% for 2012, and 2013 we get the 35.5%. Let's move for the net profit margin. This is the formula for the net profit margin, which is earning after tax divided by net sale and times with 100. We take the profit for the year as earning after tax and revenue here, and we get 11% for 2012, and 2013 we get the 11.7%, and we can compare which one is better, 2012 or 2013. Okay, this is the profitability comparison by Nestle for 2012 and 13. For the gross profit margin, 35.5% for the year 2012 is better. It is because efficiency in controlling cost of goods sold and have a good pricing policy. For the net profit margin, 11.7% is much better than 11%. This is might due to the lower operating expenses, so the firm can maximize the profit.
Now I will proceed about the market ratio. Definition of market ratio is market ratio measure investor response to owning a company stock and also the cost of issuing stock. Now we calculate the earning per share ratio in company Nestle Malaysia Berhad. This is a statement of profit or loss and other comprehensive income. And this is a capital reserve. This is the calculation of the market ratio. The formula of the EPS is net income minus dividend on preference stock divided by number of shares. For the year 2012, 505,352 divided by 234,5100. This value get in a capital reserve. And for the year 2030, 561 divided by 234,500 is equal to 2.50. From my analysis, year 2030 has a highest EPS. This is able to distribute more to ordinary shareholder as dividend. Okay, now second, we find out the dividend per share in company Nestle Malaysia Berhad. This one is consolidated statement of changes in equity, and the second is capital and reserve. Formula for dividend per share is dividend divided by number of share. For the year 2012, dividend is 422,100 divided by 234,500. For the year 2030, the dividend is 504,175 divided by 234,500. And the analysis is year 2012 has a lower DPS, able to maintain and keep maximum shareholder wealth. Okay, next we calculate the dividend payout ratio. This one is consolidated statement of changes in equity, and this one is the statement of financial position. And this one is the formula for the dividend payout ratio. Dividend payout ratio is equal to yearly dividend per share divided by net income. So now we calculate the year of 2012. Year dividend per share for 2012 is 422,100 divided by 505,352 from the financial position. And for the year 2012, DPR is yearly dividend per share 504,175 divided by 561,701. And the analysis is year 2030 has a higher DPR, able to cover the dividend paid from the net income. Okay, now we calculate for the price earning ratio in company Nestle. This one is the group financial headline, and this one is the formula for PER. PER equal to market price divided by EPS. The market price for 2012 is 62.84 divided by 2.16 that we get from the calculation of EPS. For the year 2030, the market price is 68 divided by 240 equal to 28.3%. So from the analysis, year 2030 has a lower PER. The amount are covered for income.
Okay, for the last part, for the market ratio, we find out the dividend yield ratio in company Nestle Malaysia Berhad. For the formula, dividend yield ratio is dividend per share divided by market price. The value of the dividend per share we have find from the previous calculation and also the market price value. For the year 2012, the total is 0.03, and for the year 2030 we have 0.32. So the conclusion is year 2030 has a lower DY. That means it's easy to maximize shareholder wealth during the year. Okay, that's all for our presentation. Thank you.